Thank you very much. Welcome to the Halftime Report. I'm Scott Wapner. Front and center this hour. The setup for stocks, they are higher again today. Lots of moving parts, as Carl was just talking about in these markets. Joining me to discuss for the hour, Joe Terranova, Stephanie Link, Jason Snipe, and Jim Lebenthal. We do have a bit of a mixed picture, but as Carl said, Dow hits a new all-time high. Yields are lower. The 10-year below 4%. Saw it last at 395. We'll watch all of that. We are, of course, getting into the heart of earnings season. BlackRock's Rick Reeder, he was with me yesterday on Closing Bell. He said the setup remains really good. Listen.
I think there's a couple things at play. One, you've got an economy that's operating at a pretty good level. I mean, just printed, or we think you printed second quarter GDP at 3.8. Third quarter, we think is running 3.3. You got an economy that's operating at a pretty good level. And you've got a Fed that's got to bring rates down. And you've got a dynamic where corporate earnings are pretty good.
All right, that's Rick Reeder. He lays it out. Jason Snipe, economy good, rate cuts coming, earnings are going to be good. Is he right on the money?
I think he is, Scott. 86% of companies have beat so far this year. Now, the earnings beat rate is slightly lower than the industry average at 8.5%. So the beat rate has been about 5.9, I should say. What I'm excited about going forward is their earnings story for the rest of the index, right, the 493. So if we look at the Mag 7 earnings growth this year, it's about 15% into this quarter. The rest is looking at 6.7%, but going into Q3 of 2026, that number starts to converge, looking at 19% Mag 7 earnings growth to 15% of the others. So for me, I like the breadth story that is starting to get some oxygen, and that's why I continue to like this market. We're always focused on earnings here.
You like the Reeder story?
I love the Reeder story.
You agree with that?
100%.
Earnings, economy, rate cuts?
100%. We're running
AI investing, Mag 7, CapEx.
Yeah. I mean, yes. The economy is growing at 3.9%, actually, the Atlanta Fed tracker most recent number. It is certainly helped by AI, but the consumer is also doing their part. Look what Coke just reported today. They guided for 5 to 6% organic revenue growth. That's huge. They said the consumer is fine. Low end, not so much, but that always is the case. What's also interesting to me, Scott, is that not only did we talk about consumer has jobs, they've got wages, now you're starting to see commodity prices actually come down. Gasoline prices are down 18% year to date. Food input costs are starting to come down. Even home prices in certain pockets of the country, namely the Southeast, are coming down. Rents are coming down. All of this is really good for the consumer. So I'm not in this camp of AI is generating all of the growth, and if we didn't have AI, we would have 0% growth. I think it's consumer and manufacturing, AI, and the renaissance that's happening there. And yes, we do have the Fed that's starting to cut, QT going away at some point, and then, yeah, I mean, earnings have been really good so far. The banks were off the charts. I know we're going to talk about that. The big six off the charts.
Speaking of commodities, it's worth noting today, gold's getting hammered. It's the worst day since 2013. Take a look at that. Silver getting crushed. That's a considerable story, too. I mean, you don't see gold down 5% that often. Silver's a bigger decline of almost 7%. That's the worst day since April. So I gave you the Reeder readout, if you will, of all the good, right? And people know the good.
Yep.
There is, according to some, though, a lot of froth around the edges.
Okay.
Bank of America talks about that today. They don't say it's in the core as they look at the core, but around the edges. Look at the gold stocks. Look at nuclear stocks. You can look at gold stocks year to date. Those gains are crazy. GDX up more than 100%. Newmont up 132, and so on and so forth. Nuclear, Oklo's up 600%. Is there a problem in a certain part of the market with too much froth that needs to come out? Has the run-up in gold been too dramatic, and some of the other metals, like silver?
It becomes a problem when the market does not efficiently correct the over-speculation and maybe to a certain extent the excessive leverage. What is going on today in the precious metals is exactly what you want to see happen. It is healthy.
A self-correct.
The value of the U.S. dollar has risen so far month to date. The dollar is up again today. Let's talk specifically about the precious metals.
Let's do it, because Newmont's the worst stock in the S&P 500
down
today.
9%.
And that's yours.
Okay, down 9%, the context of a much larger appreciation for the course of 2025. But it doesn't feel good today, okay? Why is gold experiencing what it's experiencing? Number one, without question, you have reached a moment in precious metals where you could define the environment as having excessive speculation. No doubt about that. Right. Here's the evidence to support it. Last Thursday and Friday, the GLD options market did 2 million shares on each day. That's a historic record. In addition to that, volatility in the precious metals is at its highest level since 1979. And this is all happening without what is required in the commodities complex, which is your weekly commitment of traders report. You're not getting that from the CFTC because of the government shutdown. So no question, you have excessive speculation, and that is correcting right now in the precious metals, but it's healthy. The fundamental, the secular bull market for precious metals remains in place, and on a pullback, if you do not own precious metals, you want to make sure you get an allocation to it.
All right, Farmer Jim, how do you see things as you're digging around your property, hoping to strike gold and other metals that might be under the tundra of the Raventhal Ranch?
I feel pretty good about things. I do. I mean, I think the thing that we're answering all these questions in a context of a market that's had a heck of a rally, whether it's year to date or 3 years. You know, I'm sure everybody on the panel takes a lot of calls from clients saying, doesn't this market have to go down soon? Isn't it too expensive? Look, those comments can be true, but it still means that the market can go higher and probably will go higher. It's hard to sell in this environment if you're a professional money manager. You don't want to take the risk of getting behind your benchmark, or if you are behind your benchmark, you're desperate to catch up so any dip gets bought. If you're a retail investor, you don't want to take capital gains right now. And so all the fundamentals we've been talking about combined with that technical picture to tell me that we're likely to rally into year end. Can we get a pullback? Sure, but they've been bought so quickly that I don't think you're going to get more than a 3% pullback. One last comment, because Stephanie and Jason, you both talked about earnings. Let's remember the earnings estimates in aggregate coming into this quarter were not really revised downwards, and there was a certain concern that maybe that was too high a bar and maybe it wouldn't get cleared. Well, so far it is getting cleared very nicely, as Jason and Stephanie pointed out. The bank's metrics across the board, especially credit delinquencies, pretty darn good.
Anybody care about what Torsten Slok over at Apollo has been talking about, especially as it relates to the Russell, that unprofitable stocks are beating profitable ones?
Yes.
Really started to diverge as you got into the beginning areas of the fall. As you see, they're sort of hand in hand. And then as you get into September, you have a bit of a divergence there. Negative EPS starting to rise, whereas positive EPS was starting to fall. Absolutely,
you're concerned about that, because if there's not a handoff to quality, then you have the setup we had in 2021 all over again. I'm actually encouraged by what we're seeing so far in the month of October, where, as I mentioned yesterday, quality is outperforming once again. Quality is up in the month while momentum is down. So on a day like today, we are highlighting the correction in some of the speculative areas of the market that have rallied so significantly. You're seeing that the quality factor, again, is stepping forward today, and volatility is down once again today. So you go out, you could buy that insurance. So I don't think that we could have ever expected that the non-profitable companies would continue to be the hallmark of what this secular bull market is. There has to be a handoff at some point to quality, and I think we're at the early stages of that, and I think that's going to be the theme in 26.
What do we think?
You know, I think, to Joe's point, I think we do need some balance here. I think part of it is obviously the cutting cycle that is underway, which is giving some oxygen to the speculative favor that you're talking about. So the names that we've been talking about, obviously, this week and over the past couple of weeks, is what's going on in biotech. A lot of unprofitable names in that sector. However, the M&A cycle, I think, is going to really get some fuel going into next year. So I think you just have to be, you have to really evaluate the whole picture and understand the narratives to really understand what's going on under the surface.
I think at the end of the day, after earnings season, quality will win out. But it's so early on right now in terms of earnings season for quality companies. So I think, but eventually they will shine. And not only will they shine on earnings, but they're going to shine on margins. margins are going to accelerate from here. And that's why I'm so optimistic. That's because the economy is growing, and that feeds right into earnings, and that feeds right into the margin story, which is operating leverage for the earnings picture.
Apple doesn't meet your quality standards, apparently, because you don't have it in the Joe T, but it's on the cusp of $4 trillion in market cap. It needs about $6 more bucks. 269.53 is where Apple gets to $4 trillion in market cap. The stock is already extending its record high. You own it personally, but as I said, it did not meet the at least one part of your metric, if not, because the momentum obviously back.
Scott, didn't meet both at the end of July. Remarkably, the appreciation, the significant appreciation, has been post August.
Let's look at the chart because I want to see from. Let's look at August to now.
Yeah.
Let's look at that.
So it has been the struggle with lifting the revenue growth that's been the challenge on the quality side. I think that China now coming back once again as a positive catalyst and contributor to that revenue growth is going to embolden the story for Apple. Look, I can't sit here for compliance reasons and tell you what we're going to do on October 31st, but it certainly looks like a really good candidate when you're measuring quality and momentum. I also think to Steph's point, when you look at Apple and you see this technical breakout that we're having, it is a company that kind of checks the box when you're thinking to yourself, okay, in 26, do I have to think about reshaping my risk a little bit in an environment where valuations are stretched? And even though you could make the argument Apple's valuation is stretched, it certainly could be defined as a company that's quality for sure.
Price target goes to 290 at Wells. It goes to 279 at Goldman Sachs. Ives at Wedbush says the street is still, Jason, underestimating the iPhone 17 cycle.
Yeah. Listen, the iPhone 17 numbers up 14% between China and the States, right? For the 17, you know that I trimmed it last week, and that's kind of because of the run it's had since August. But for me, and Joe, you just alluded to it, 32 times forward, right? 8% growth rate. This is a tough one in a lot of respects, and I know that's always the story with this name. But as I look forward, and this is the reason we didn't sell it outright, I do think the innovation story is going to start to hit the name next year.
Yeah, but I mean, why sell any part of it when it's regaining its momentum?
Yeah, no, I mean,
it's like it sits it out, and then it finds itself, and the first chance you get, you're taking a trim on it rather than riding the momentum. I'll get you in, Steph, in a second.
Part of it for me was I was overweight the name. I'm now market weight, so I'm comfortable with the position. And to my points earlier in looking at the broadening out trade, I want to look at other areas of the market where I see real momentum. Yes, there's been a lot of upgrades yesterday, and that was great. The stock was up 4%. But for me, I think it's the 493 and other sectors that I think can produce for me going forward.
I don't know. I mean, 31 times for 8% growth is just not that compelling.
That's the knock. That's the knock.
Not compelling. And I don't think the 17 is going to be super cycle. I really don't. I think 18 could be, because they don't even have AI.
Yeah, I know, but the numbers though already suggest that it's going to be a pretty darn upgrade cycle.
It might be fine, and services will be the bright spot for sure. But I just don't. I still don't think it's not going to lift the growth rate. It's not going to lift the 8% growth rate.
Can't you incorporate the fact that potentially they will deliver at some point on AI, because that's not built into the stock price?
I could wait until the second half of next year and let's see, and we'll figure that out.
Well, what would you be willing to pay for it? If you don't want to pay 31 times, the market's at 23 times. You don't think it deserves a premium?
Not with that growth rate.
What would you be willing to pay for it?
23 times. Market multiple. I just think that there are other names. Like, for example, Meta. Meta is growing 20%. Operating margins last quarter expanded 500 basis points. The year of the efficiency is now the decade of the efficiency. So I think operating margins go much higher. The stock is trading at 21 times for 20% growth. That I pay for. And I have no idea why it's lagged the Mag 7 so far, year to date, but I think it's going to play catch up. And I like it very much. And Amazon, throw that one there in there too, because that stock has done nothing. Yeah. And that valuation at 13 times EBITDA, when historically it's traded 18 times, and I do not think AWS is losing market share at all. I think it's just a law of large numbers. They're growing 17% versus Google and Microsoft at 30%. I got it, but they're much, much bigger. So, and they also have the retail component and they have the advertising component. So those two are much more compelling to me than Apple.
Morgan Stanley expects Meta to move meaningfully on earnings. They look for better than expected ad results and a guide on engagement growth accelerating. B of A's bullish, quote, look for revenue to beat to support AI investment returns. They like a buy. Deutsche is asking, can they shake off the overhangs, right? Steph talks about some of that. It's kept the stock from outperforming some of its peers. Amazon is an interesting one, as we said. Bill Baruch joins us now because he agrees with Steph. He's bought more of that name. Tell me more.
You can't have a quality conversation without mentioning Amazon. The stock is trading at 25 times forward earnings right now. It's one of its lowest valuations ever. We expect AWS to reaccelerate, maybe 19% year-over-year revenues, profitability to reaccelerate, but really kind of got us on yesterday to really pull the trigger. Tested the 200-day moving average on Friday. It responded into yesterday. The broader market, another clean, constructive pullback. That's been the trend. You pull back, you have this nice big, kind of bottom out really quickly and then rally. I think the market in general is setting the stage for new record highs maybe after today or tomorrow. And we like to look at opportunities just within that type of, that's our framework. So if Amazon gets out above 230, I think you're also going to see those flows. As a name that hasn't done much this year, if it gets above 230, a lot of people are going to chase it. So I think that's just a really great backdrop here to be adding and increasing Amazon. We were at a 4.5% position. We have increased it to a 6% position. I've talked about the cash that we've trimmed names over the last couple of months. So we're getting that cash to work. And I think there's no better place right now than to look at Amazon ahead of earnings. It's your largest position now. Yes, it is our largest position. It's, a lot of these big cap tech names we have neck and neck. NVIDIA's just an eyelash below it. So we increased in our main portfolio, but also in our concentrated portfolio. It's now an 11% position. So it's done nothing year to date. And I wouldn't be surprised to see this finish up 10 to 15% on the year. Bill, thanks. Appreciate that update on this purchase. Everybody owns this name.
I'm big in it too, and I'm a big believer. Look, all of these Mag 7 names, they seem to go through periods in which they do nothing. We've seen it with Apple over the last couple of years. We've seen it with Alphabet until recently, and there's always a reason specific to that company why it goes through a lull. But when they come out hard, and I expect that's what's going to happen with Amazon as well. I mean, there's no reason to doubt the consumer right now. There's no reason to doubt the AI CapEx build out and its benefits to Amazon Web Services. I'm big in it. I'm going to stay big in it.
Joe?
Yeah, I mean, I've said I think it's more of a 2026 story. Unfortunately, in 2025, the market is not paying attention to valuation. That doesn't confirm that that's the right thing or the wrong thing to do. It's just not. So in that environment, you're going to see Amazon is underperforming. And right now, the stars clearly are NVIDIA and Alphabet and Apple. And I think that's where, as you move towards the end of the year, you're going to see a lot of attention paid. I think in 2026, Amazon represents itself.
There's an interesting story in the market today. It is Alphabet, which is down 3%. It's a pretty decent decline for that name, down almost $8 on a post from OpenAI on X. Mackenzie Sagalis joins us now with some reporting on what could be causing this decline in shares of GOOGL. Mac.
So we saw OpenAI announce this surprise live stream. It starts in about 40 minutes from now. And the internet is buzzing with speculation that it could debut a new AI-powered web browser. And I went to the YouTube link that is going to be hosting this live stream featuring Sam Altman, and they're calling it ChatGPT Atlas, our new browser. They say in the same link that it's now available globally on Mac OS, Windows, iOS, and Android. It'll be coming soon. This kind of agentic browser would go beyond search, ostensibly, navigating and acting on your behalf, which is a direct threat to Google's core business. And Sam Altman has hinted at this ambition for years now, with ChatGPT now claiming 800 million weekly users. OpenAI could finally have the scale to take a real swing. And Scott, unlike Perplexity and others which haven't dented Google's grip, this could mark a turning point in Google's dominance.
All right, so it's 1 o'clock Eastern, so we're looking at about 40 minutes from now. Mackenzie, thank you, Mackenzie Segalis. We'll see what happens. But you're the chief defending officer of Alphabet.
Yeah.
You want to take a shot at this one?
Yeah, I think every competitive threat like this announcement needs to be taken seriously. By no means do I want to sound blasé about it. However, I think we still have a horse race going on between many, including OpenAI, including Alphabet, including your Meta, Stephanie, as far as who's going to be the dominant leader coming out. But that coming out process is going to be a year, 2 years from now. And I'm not giving up on Alphabet right now. I find the multiple attractive. I find there's good momentum in the shares. Yes, it's down 3%, but it's, that's almost from the all-time high. There's good momentum in the name. I think the business is going strong, but I will look to the earnings report coming up in a couple of weeks to see if that search traffic is still hanging in there.
What does that mean, still hanging in there? What does that mean?
Meaning this question of competitive threats is still there.
Well, obviously it's still there. What do you mean?
Well, I'll tell you what I mean. What I mean is that the last earnings report, it did a lot to put to bed or at least assuage concerns that their business, their core business of search, was getting eaten into by the new AI chat features. And if we get one more quarter in which search traffic shows that it's really not just hanging in there but doing well at Alphabet, I think these questions will still linger, but they won't have the impact that they have had in this year.
But let's be clear. Their search is going to continue to do well. It's a bit of a vagary, well, whatever that means. Would you submit to the idea that, given what OpenAI may announce today, and who knows what is announced elsewhere, that their dominance within search is at risk?
Well, I think what you just said is tautological, okay? Because when we talk about their dominance in search, if we go back 10, 15 years ago, it was only Google, right? That was a verb. You Google things. Now you ask chat, those sorts of things. So the dominance has been eaten into. The question that I'm trying to answer, or at least that I perceive, not from you, Scott, but from the market in general, is that dominance going to become a pervasive weakness in the earnings power of Alphabet? And emphatically, I don't think so. I think when we look at the AI features that Gemini and other things regarded by Alphabet that they have, I think those are potent competitors. The verdict is still out on who will win the AI race, and it's going to take years.
Okay, that's fair. One of the other big stories of the day came from one of our very own, David Faber, earlier reporting on Warner Brothers Discovery putting itself essentially up for sale. David joins us now with some details to add to that report. David, what do you know?
Yeah, Scott, of course, continue to report on this, as you say. Warner Brothers this morning, ultimately in a press release saying we're for sale. This after what we've been reporting on has been weeks of conversations with Paramount, which has been mounting an effort to buy Warner Brothers Discovery. A lot of back and forth there, done privately, ultimately resulting in a decision by Warner Brothers Discovery, its CEO, David Zaslav, its board of directors, to put itself up for sale and essentially see what else may be out there before perhaps deciding to enter into a deal with Paramount. Clearly, at least, not feeling that Paramount got to a place that would have been the equivalent of at least what that board and Mr. Zaslav feel would be the value created by the so-called spin-off plan that they had underway, namely splitting the company into its studio and streaming business and into its global networks business. And my understanding is there may have been a lot of back and forth between the two in terms of Paramount explaining why it believed the targets that Warner Brothers Discovery was looking at for price and for EBITDA in, let's call it, a couple of years out were not going to be something that would be attained, nor would the multiple, nor would therefore the underlying stock price they may have been talking about as high as what, in the low 30s. All that said, as we reported earlier, at least in terms of indications of interest, it may include the likes of our parent company Comcast and Netflix. But in the last couple hours, certainly just continuing to sort of work through what that would mean and what that might look like. There are a lot of gating issues there, as we like to say. Comcast, our parent company, has a roughly $29 stock price. How would mount to bid? And again, this would be for the studio and streaming business. They would actually restructure the so-called spin-off so that global networks would be spun off. and RemainCo would be the studio and streaming business. So any potential buyer now would essentially be buying the studio and streaming business, given the change in the structure of the spin. I know it gets complicated, but essentially it becomes a taxable spin. But apparently the taxes are not that high and therefore don't amount to that much in terms of a per share basis. So Comcast, $29.76 right now. Well, can you really mount a significant bid at a big premium somehow to the current stock price with that kind of a stock, or do you need to lever up to a certain extent? And if you do that, what's that going to do to your stock price? Not to mention the regulatory side, where there are many doubts as to whether the company would be able to get the approvals it needs from the Department of Justice, certainly under the current administration, and therefore might have to include a huge reverse break fee. Netflix, which we'll hear from later today when it reports earnings, and certainly gets at least some questions about this. You could imagine its desire for the library and for the studio, but putting together HBO Max, #3, with Netflix #1 in streaming also presents a significant potential anti-competitive and regulatory impediment. And so, you know, just Scott sort of doing more reporting as we will continue to. This process will work its way out. The board will have a record, which it very may want to have in terms of at least having looked other places, and then perhaps they do come back to Paramount and get a deal done somewhere in the mid-20s, largely in cash. That's speculation at this point, but it doesn't mean in any way their decision to go to the market and say we are for sale precludes the possibility that they end up with Paramount, which is the only whole company bid, and which very importantly as well seems to have a much clearer regulatory path to approval.
Yeah, well, it's intriguing. That's for certain, and it will remain so as each incremental report that you have, David, to add to this story. We appreciate you bringing that to us. That's David Faber joining us. He's at Active Passive, by the way, where he's already done some interviews and done some reporting on this. So we'll follow that, and we'll keep an eye on shares of all of those companies which are moving. There's Warner Brothers, which is the big winner, obviously, on that report today, up more than 10%. Let's take a quick break. When we come back, we do have our calls of the day. We have a big sell call on one of Jim's favorite names. Let's talk rock climbing. Let's talk rock climbing.
What's a good stock to do that?
Because they climbed the cliff, the mountain yesterday, and now the rope broke for Cleveland Cliffs. Now, I didn't have you call in yesterday.
It's all good.
When the stock was up massive.
I'd rather do it today.
No, I would too.
Yeah, but for different reasons.
No, well, I knew you were coming on. I knew you were coming on today.
It's better to do this now when the stock is down.
The critics, if you want to call, they're saying, okay, the stock was only up because the CEO talked about rare earths, which is like talking like AI. You just say rare earths,
right?
And the stock goes up, and now the street sort of caught on to that and is like, all right. And today it got downgraded to underweight. After what Wells Fargo calls excess exuberance.
Okay.
And now here's the stock down big today. What's the story here?
The story is changing. Leave rare earths aside, okay? That is not what excites me, but the narrative is changing here. 6 months ago, this was a company in trouble, highly levered balance sheet. They had just bought a Canadian steel company that was now facing dramatic tariffs, okay? The narrative is changing in many ways, and rare earths is very low on the list for me. Number one, auto demand is picking up. They've just signed contracts with all the major OEMs at favorable prices for the next 2 to 3 years. And we see what's going on with GM today. I don't know if we'll get to that, but we see what's going on. Auto production is going to pick up, and that's 1/3 of their business. Probably more important than that is they've signed a memorandum of understanding with an international steel company that wants to leverage idle assets, idle plants at Cleveland Cliffs.
Wells says that's an overreaction in the name.
I disagree, and that's fine. Wells is, everybody's going to have their opinion. The details haven't been released. In the press release for the earnings yesterday, it was called highly accretive. Now, look, I like the way that sounds. But either way, the story has changed, and you can see it in the share chart. If you look at 1 or 6 month charts, this stock is clearly climbing. A month ago, the 200-day moving average peaked up. Now, listen, I'm the fundamental guy. I know, Scott, I'm not the technical guy, but I do pay attention. The 200-day moving average is now going up. The 50-day is soaring. And frankly, all today is doing, from a technical point of view, is filling a gap that formed yesterday yesterday that needed to be filled. That's why I'm happy to talk about this today. If I'd been talking about it yesterday, I would have said, hey, you got to be in the stock, and then we would have had today, and I would have looked like a dope, you know? But I think this is the right price, and I'm actually going to buy some more for myself personally right now. Okay, nothing dramatic about it, but I didn't want to do that and then start talking it up. So here we go.
You're buying it right now?
Yes, sir.
All right, you let your fingers do the talking.
While you buy it, can I ask you a question without you getting upset at me?
Do I ever
No
get upset at
guarantees.
you?
No
Do
guarantees.
I get upset with you?
From an outsider looking in, you could make a strong argument that U.S. steel prices are maybe artificially inflated because of the tariffs. You could make that argument.
Yes.
Okay, but they are elevated for
this.
sure. They are elevated for sure.
Bring it.
So why is it that the company keeps reporting negative gross margin? I don't get that.
Well, the EBITDA is positive. That's the good question. The profitability margin that I look at and most investors in Cleveland Cliffs are going to look at is EBITDA. EBITDA came in better than expected yesterday. But I think there's an underlying question of, are tariffs real? Are they going to last? First off, the company thinks that they will from a national security point of view, and buttressing that, they just signed an order with the Department of War, that's what we call it, for $400 million of grain-oriented electrical steel that will be produced over the next few years. Here's the important part. It's for a stockpile. It's for a national strategic stockpile. That's where the country is right now.
Do we need that?
Hey, wait a second. I'm not going to answer that question because it's irrelevant. We're doing it, okay? And you know it. This is not my choice. It is the presidential administration's choice that we are going to be stockpiling critical national minerals and metals, of which they've already started with Cleveland Cliffs with this $400 million order.
Okay. Let's talk about some stocks that are on the move. We start with GE Aerospace. Boosted their 2025 earnings forecast on strong engine demand. Stephanie Link, the earnings are now 166 versus 145 estimate. Revenue's $11.3 billion. You own the name.
Great management team, great execution, beat and raise. Margins in engines were up 170 basis points. And on the defense side, up 380 basis points. That's the margin side. On the sales side, up 26%. Very, very good quarter. Stock should be up more, but it's up a lot year to date.
Okay. Jimmy Cliff, Lockheed. Do you know Jimmy Cliff?
I do. Now I'm going to have songs of his in my head. Thank you very much. You're having quite a day,
That could be
Scott.
my new one for you. Farmer Jim's getting a little tired anyway. I don't know. What do you think?
What do I have to bring the
want a new
tractor
one?
on the floor of the stock exchange?
Yes.
The Japanese tractor
I
you
like
have?
Jimmy. I like Jimmy the Bull. That had a certain, mob
Lockheed.
overtone to it.
Lockheed. They raised their full year outlook.
Yep.
Jimmy.
Yeah,
Do
so
you want to talk about it?
Stock's down a little bit, and this was a stealth cut. So they beat on earnings, they beat on sales, they raised guidance, but they raised guidance for just a little bit less than they beat in the third quarter. So the street is looking at it as a stealth cut. Okay, I mean, that's why it's down, but clearly the momentum is there, both in the business and in the share price. It's been coming back quite nicely over the past few weeks. Good demand for the F-35, good demand for missiles. I hate the way this sounds, but it is what it is. They're buying back shares. So I think today's decline is actually a buying opportunity.
Okay. How's the Kubota?
I like the Kubota. I might be accused of tractor neglect. I'm feeling like I need to spend some quality time with the tractor. I have some repair work to do between me and my tractor.
All right. We'll do finals next. We'll see you on closing bell, a couple hours, 3 o'clock Eastern. We'll see if the Dow can extend that record high that it's set today. Anastasia Amoroso, Alicia Levine, and Alex Kanchowitz. We got Netflix coming up too. We'll walk you right up to that. Jason Snipe, what do you got?
AbbVie, stay long.
Farmer Jim?
I thought you were gonna
Tractor
skip
Jim?
me.
No, why would I ever skip you?
I don't know. Qualcomm.
Well, if you don't hurry up, I'll skip you. Steph.
Active, GM is a 9% customer.
Palo Alto.
All right, good stuff. I'll see you on the closing bell.
Hey everybody, welcome to Blue Cloud Trading. It's Tuesday, October 21st. Markets closed. It's 6:01 p.m. As I'm recording this video, we just saw some clips from the halftime report. And in this video, this segment of the video, we're going to go over a number of the stocks they talked about. Not all of them. We're going to go over about 17 stocks and ETFs that they discussed on the show. Usually I don't cover the stocks that are in my member portfolio. We'll go over the S&P 500, the NASDAQ, the Russell 2000. We will take a look at Apple, Tesla, Meta. We will take a look at the sectors, which ones are looking strong. And we also have some requests from our members like Uber, Lyft, okay, Bath and Body Works, and Global Foundries Inc. We'll look at those. So before we get started, and of course, we're going to be looking at the technicals. And why are we going to look at the technicals? Because they help us to get a better sense of where the market is. All right, where are we truly? Are we are we going to make it through this resistance area here in the S&P 500, the 673.95? Maybe, but we're stalling. We're stalling, and you can see here the SPY. It closed at 0%, did not move. So let's take a look at the S&P 500 first here. All right, so Dow Jones up. It was the only index that was actually up today, the Dow Jones. You can see it moved up quite a bit here, and then slowly throughout the day, around 11 a.m., it started to drop. So that's not good. That's not positive. You can see that little downward channel that started building up there. NASDAQ, you can see here, it was all over the place, but it finally just closed down 0.16%. S&P 500, here it was at the opening price, moved down a little bit, moved up, and then finally closed around the same at 0%. Okay, no movement in the S&P 500. You don't see that often, 0%. Russell 2000 down 0.47%. So that one gapped down in the morning and then continued around 10 a.m. Came back to the prior day's closing price. And then you can see that little double top there, and it dropped. So down 0.47, down the most. Let's take a look at the heat map that's going to show the individual stocks and how they performed today. So Amazon was up 2.56%. Google down 2.2%. Broadcom down 1.88%. NVIDIA down 0.81%. The financials were mixed. You can see Visa, MasterCard, American Express. The credit services did well, but the banks diversified did not do so well. Healthcare stocks were slightly down here. Walmart was down. Tobacco was down. Basic materials were mixed. Utilities were mostly down. Industrials did pretty well today. So let's look at the groups. Actually, you know what I want to do first? Let me go back to the map. Since it's after hours, let's take a quick look at the after hours. There's a little tab here I can select, and we can look at the after hours performance. Okay. So it looks like, yeah, Netflix is down 6.36% after earnings. Amazon down 1.4%. Google down, up 2.53% after hours. All right. Looks like, ooh, look at that. Texas Instruments down 8% after hours. ADI down. Okay. Good to know. Here's the groups. Let's go ahead and zoom in. And you can see consumer cyclical, industrials were the only top performers today. Basic materials, a big hit. Gold, silver dropped quite a bit. The gold mining stocks dropped. Utilities dropped down 1.13%. Here's the 1 week performance. Basic materials down the most, 3.12%. So we're going to look at some of those gold stocks in a few minutes. Let's first look at the SPY here. As I mentioned before, what we're doing here, folks, is we're using a unique indicator. It's called the Ichimoku indicator. And basically the idea is for us to see where price is in relation to the cloud and the moving averages. We want price to be above these moving averages. If you want a little bit more intricate description about this indicator, look at yesterday's video. I went into it quite a bit, so I don't want to go over every single time. But yeah, check out yesterday's video. Now, what's happening today? Well, as you can see here, it's flat. It's stalling at this level. Now, I talked about this level yesterday. I said we need to get above these levels. Notice how price has been stalling. Every time it comes there, drop, right? So that's what's necessary for the S&P 500 to continue to the upside. In my opinion, I wouldn't be doing anything here. I'd just be sitting on my hands and waiting. How about the QQQ ETF? Same situation. So it did break through that little symmetrical triangle, but it did not take out that high, right? And it stalled right there again today, down 0.03%. Russell 2000, this one dropped 0.47%. You know, that's also has that 252.77 level to break through first before we can see a continuation. You can see the directional movement index here that I'm also using. That ADX is just dropping. That means the momentum is kind of out of this market right now for the Russell. FEZ, now this one was a little bit more concerning to me because it was down 0.79%. This is the Eurostoxx 50 ETF. The reason it's concerning is because we've got that high up here of 63.60, and now you can see that it's now starting to, like, I don't know, there's a lower high that's developed here from that high. And as small of a distance as it is from that level there to 63.60, that is a problem. Why am I considering this a lower high at this point? Well, because we took out the low of the prior day. Right there, you can see the red candle there. It did drop under the opening price yesterday on Monday at 9:30 a.m. So that's a problem. All right, it's more likely, higher probability it's going to continue to drop a little bit. How much further? Well, it will find some support hopefully here around Tenkan-sen, another 1% away from where we currently are. We'll see if that happens tomorrow. Let's take a look at the Dow Jones. Now the Dow also, it had a little spike today, right? Up 0.47%. But it too was unable to successfully break through its high back here. See that candle? So that's 470.38. That's the high of that candle right there. You can see it stalled here. It pierced it and then closed under. So the body signifies where the closure of the candle is, right? So the wick represents how high it came up. This is where it closed at the end of the day, 469.22. Okay? Under 470.38. How about the VIX? That dropped 1.97%. That's a good sign. We want that volatility to be dropping, coming out of the market. This is also considered the fear index, right? Another name for it. It re-entered the cloud here. That's good because it does we want the inverse situation here. We want this to be dropping, and that typically helps the market move up. But in this case today, we didn't really see that. Well, except for the Dow. So I wouldn't get too excited about that drop in the VIX. It was pretty insignificant at 2%. Now, there was about 17 stocks and ETFs that are mixed up in here, and the majority of them do not have a blue flag. And what does that represent, the blue flag that I've put here? Well, I've analyzed all of these stocks, and I've looked at the weekly chart. I've looked at the daily chart, and I'm looking for the technicals to confirm that this is strong on both time frames. Here's the weekly chart for General Motors, for example. So this one gets the blue check mark. It gets the check mark, meaning it's technically sound. It's technically okay to be entering a position in this particular stock or ETF, whatever it is that I show. So General Motors up 14.86%. Okay. So yeah, pretty nice move today. That's the weekly chart. Here's the daily, the big gap up. All right. So that's interesting. Let me just check something. I want to go back here for a moment to FinViz GM. Yeah. So you can see here today, General Motors stock jumps over 15% for biggest single day gain in 6 years. 6 years after much better than expected Q3 earnings, raised full year in 2025 outlooks, updated guidance, tariff relief, strong truck sales, declared quarterly dividend, and announced wind down of BrightDrop electric van business. Or wind down. Okay, good to know. Good to know. And here's the information. This FinViz also shows us the earnings right there. You can see the surprise of earnings per share, 22.36%, and the revenue was up 7.89%. So the estimate was 45 billion. It was at 48.5 that they actually reported. So not bad. Let me just zoom out from where we see the performance year to date. It's up 25% so far. There's the sales growing. So yeah, GM looking pretty good. Okay, let's keep going. So now we'll look at Palo Alto Networks. This was up 1.22%. You can see here yesterday it popped above the Tenkan-sen and it continued. That's essentially what you want to see. On the daily chart, prices above the 2 moving averages, the 9 period, the 26 period, and the Ichimoku cloud. The Chiku span, the white line, is above price. That's also a bullish signal. And so it's continuing to move up. I like what I'm seeing here. WBD. And by the way, it does look good on the weekly chart too. Here's a weekly chart for you. Okay. So that's looking pretty good. You can see that we actually took out this high. Let me go ahead and right about there. That high is 210.39. Let's put that in there. Notice how we stayed under that low. Let me circle it too so we can see what I'm talking about. That high right there from that candle. Notice how we stayed under it here on October 10th. We stayed under again. We pierced it. We got up. We actually opened up above it yesterday and then closed underneath. Today was a different sign. Today it actually closed above. That's an important signal. I will say this though, the volume was pretty insignificant. Do you see the volume here? It was like almost 1/3 the volume from yesterday. So when you see a breakout, you do want to see a larger volume bar, at least larger than the prior day. And we don't have that here, so I wouldn't get too excited about Palo Alto at this point quite yet. Maybe even wait a little bit until it gets above the high of that shooting star candle. The shooting star is that candle right there, okay? WBD. Okay, well this too, WD, Warner Brothers Discovery, up 10.97%. Let's take a look at WBD for a moment here in FinViz. There we go. It launched formal review of strategic alternatives, including potential sale of the company or major divisions after receiving multiple buyout offers from parties such as Netflix and Comcast, right? So it led to that pop-up here. And after hours, it looks like it's up 2.58%. So it's at 2085. All right, you can see that there, 6:13 p.m. So that's good for WBD, Warner Brothers. Again, the volume bars are the volume down here is pretty insignificant on the, that's a weekly chart. Let me look at the daily. Okay, that's what I was hoping to see more volume here on the daily chart. Yeah, we have about 3 times the volume today than we did the prior day, and it did break through that 2024 level based on that little high. And if we look at this again after hours, it looks like it's continuing to move up. Let me just go ahead and click a little post-market. Boom, there we are. That's where we currently are right now. If I switch it to a 3-minute chart, this highlighted box that you see here, that's after 4 p.m. See how it's continuing to move up? Okay. The software that I'm using, by the way, is called TC2000. And if you guys like, what you're seeing here, you can, you should try it out. Anyone can check their stocks, their ETFs, mutual funds. You can check on your mutual funds if you want to. It's all based on the same premise. And if you use the same sort of strategies or similar strategies and using technical analysis, it can help you make better decisions about your trading. And so how do you get access to it? Just go to Blue Cloud Trading, my page here, and click on 9 more links right there next to the link there. Scroll down, read a little bit about me, scroll down, select this link, and you'll get a $25 coupon. All right, and you can find out about the pricing and all that other stuff when you click on that. Okay, let's get back, folks. Let's get back to the next one is going to be AbbVie. Now this one here also looks pretty good for the most part. The only negative why it did not get a blue flag is because the Tenkan-sen actually crossed underneath the Kijun-sen, the green line. That's the faster period, the 9 period. It's at 230, and the Kijun-sen is at 230.32. It's above it slightly. I don't know if you can even see it, but it's just barely above it. It's not a big deal, honestly. I think tomorrow we'll get more clarification on it, but it was down 0.29% today. All right, so that's the daily chart. Here's a weekly chart that still looks pretty positive. ADX is still moving up. I like it. APTV, look at this one, Aptiv, Consumer Cyclical Sector, Auto Parts. This is a weekly chart we're currently looking at. Stalled here. Okay, this was the week ending Friday, October 3rd. Here we were on October 10th, stalled right there, and now we're still underneath it. Okay, so I wouldn't be jumping into this. You're only about 2.5% away from that major resistance. So why not wait for it to break through? Here's the daily chart. Tenkan-sen is under Kijun-sen as well, so you don't have all the elements of Ichimoku giving you an okay. Check out gold, folks. B is the ticker symbol for Barrick Mining Corporation. Now, it was in a nice consolidation right here, just kind of going sideways for a little while. But this is significant. That little break under that low tells me that this could be a more extended pullback. All right. What else tells me that is the volume bar down here. See that volume bar? A little bit more volume today than yesterday. And then also, the other thing, here's some more evidence for you. The directional movement index has become bearish. That's when the red line crosses above the green line. Okay, so now the momentum hasn't started to occur yet because the ADX is still dropping. All right, but if that white line starts moving up while the red line is above the green line, that's some no bueno for you. Okay, I'm just giving you a heads up because it's going to signify, it's going to basically increase the volume will start to increase and it could precipitate. Now, here's the opposite scenario. When the green line over here gets above the red line and the white line starts moving up like it did right there, and if you go straight up, that happened on that candle, you can see what that led to, that beautiful move up. How much was it? How much of a move up was that? If we measure from that level to that level, it's about 62.7% in 1.6 months. That's how far gold has come. You know, that's a pretty big move, okay? In any, you know, universe of stocks or ETFs or sectors, I mean, that's huge. 60 in that short period of time. So now I think that we have to be extra cautious here, and this is a sign. This is also a $33.5 billion capitalization, so it's a large company. Now let's take a look at some other ones like CLF. You know, another basic materials sector stock, steel, today down 17.24%. Cleveland Cliffs. It was a nice run. Okay, it had moved up about 56% in 1.5 months. This might be the end of the move. It closed under the 26 period here. That's not good. Okay, what about, that's the daily chart. Here's the weekly chart. Oh, that's interesting. That is really interesting, actually. Check out where it stalled, right at the dotted yellow line, which is the 200-day moving average. Okay, so it found that it came to that level, reached that target, and dropped. Now the ADX is still moving straight up on the weekly chart because this is going to be a little bit, it's like slower, right? But on the daily chart, we had a sign even sooner back here. See how it was moving up and then that sharp drop that happened right there with that candle? It moved up more. It can certainly move up some more, but now it's starting to show some more weakness. All right, what about Comcast? Another stock that he talked about. This one here I'd stay out of. You can see that it's currently under the moving averages. It's under the Ichimoku cloud, and this is bearish territory. You don't ever want to be adding positions when stock is under the cloud. Okay, you're taking a big chance because you can't really determine where the turnaround is going to take place. The only time that you know that you have a higher probability of a turnaround and not a guaranteed one is when price actually gets above, like it did over here, and it did move up slightly for 8 days or whatever. But then that 200-day moving average was lurking right above it. Okay, so that's also not good. By the way, this was Surratt's final trade back on January 7th. I made a little comment or a little post here. Comcast. Now, what did this stock look like back then? And if you go back to that video that I made on January 7th, you can probably see what I said about it. Let's take a look. January 7th. Boom, right there. It was around this time. He was recommending the stock here. See that little candle? That made no sense, technically. I mean, from a fundamental perspective, sure. I can give it that. Profit margins are positive. Beta, 0.72. Price to sales is at 1.07. All the fundamentals are good. The PEG ratio is great. But if you don't have the technicals confirming, you can see what can happen here. You can have a continued decline. And that's what we've got in this one. So here's the monthly chart. Even on the monthly chart, we are currently under the cloud. We've been under the Tenkan-sen on the monthly since 2021. Okay, and it's dropped about 45.6% since then. So you don't want to be taking a chance because it's hard to really identify the turnaround point. Okay, let's go to GDX, which is the gold miners ETF, down 9.42%. That's a big drop. Okay, it's huge. It's a huge drop. So now what? It also looks like it's taken out this low here, right? So that's a problem right there. That's not good. I think it's more likely to pull back some more. What else am I seeing here? I'm seeing the negative GI going straight up here, and the ADX is starting to move up slightly. And there we have another big volume bar. Remember, all of this started to precipitate last week on Friday. There's the candle from Friday where price got under the Tengen-sen, and it happened on high volume. And that generally represents profit taking. So all the people that have been, I'm talking about the people in the know who've been holding on to gold for a long time. They're probably thinking, okay, you know what? I think it's about time to like take my profits here. This thing is starting to like, it's getting a little bit much. And when the big money starts coming out of any stock or ETF, obviously, then it can start to continue to wind down further. Right now, I would certainly not be buying, okay? Because now it's starting to show a lot more weakness, obviously. All right, now this could be a short. Again, you never know. The market's so interesting and weird because it could just pull back. Maybe it could even come down to the cloud and then bounce off that and continue back up. But right now, I wouldn't be getting into this. What about GLD? We had that bearish engulfing forming on the weekly chart. Right, I'm sorry, on the daily chart back last week on Friday, October 17th. And then what happened? It just popped back above it, and then today it gapped down. So this was basically just, I think it was muscle memory, where people have been just buying. Anytime price drops, they buy it, right? And it moves up. This breakdown is concerning because it also closed under the Tengen-sen, down 6.43%. Notice how the green line is about to merge with the red line. The last time that we had the red line above the green line on the directional movement index was back here. We have to go back all the way back to August 21st, 2025. Okay. So anyway, let's see. We got LMT. This is Lockheed Martin. Here it is in the daily chart. That also broke down a little bit. Now this is in the industrial sector, aerospace and defense. We got a spinning top. It looks like there's indecision here. This is not as much of a breakdown. I think it's kind of like stalling at that support level right there. So if it gets under the low of that candle, then it maybe could continue. I would say that you should be concerned about this negative crossover on the directional movement index. Okay, so it's not a buy signal here. Certainly not. Down 3.24% today. That's the daily chart. Here it is in the weekly. It's still inside the cloud. So this is not something I would touch. Here's another gold stock, Newmont Corporation. So on the weekly chart, it's only Tuesday. And we've already on the weekly chart have formed a bearish engulfing pattern, down 9.03%. If you look closely at the ADX where it's been moving steadily up, see how it's like not moving at the same rate anymore? There's a little slight change, right? You see that little drop there, and the negative DI is moving up and the positive DI is moving down. That's also negative. So yeah, that's the weekly chart. And that could certainly, once it reaches this level, it could potentially another 1.5%. It could bounce here. Here's a daily chart though, and this also looks pretty bearish. All right, so let's keep going. OKLO, utility sector, has dropped from the highs here, about 28.2%. This one moves quite a bit. So it's under the Kijun-sen right now on the daily chart. That's not a good sign. Okay, looking pretty bearish. On the weekly chart, we had that shooting star last week that formed. It's a negative reversal candle and now got underneath it. It's going to retest the Tengen-sen. It's another 7.5% almost to that next level of support. What about PSKY? That one on the weekly chart is under Tengen-sen. On the daily chart, it is also under the moving averages. No on Paramount Skydance Corporation. QCOM, it is up 1.07% today, but it is under the red line. If I just see, there's the Kijun-sen. We had a negative crossover here, so I'd stay out of that one. Silver came down, found support of the Kijun-sen, but it's under the Tengen-sen, the 9 period. That's the first stage. That's the first sign of weakness. You can even see it on the Chiku span, which is, see this white line is the closing price, basically in a line form, projected 26 periods into the past. See how it took out that low? All right, so that's not good. It almost looks like an inverse, it looks like a head and shoulders pattern, right? So you get that shoulder, the head, the second shoulder, and then the neckline was broken right there. And so that's interesting how this can give us a little bit more information about what's happening here as well. But it stalled at the Kijun-sen, so maybe we'll see a bounce. You know, again, hard to tell. Wheat and precious metals closed under the cloud. All right, there's the ADX moving up, negative DI moving up, positive DI moving down. Today I did something special in my portfolio to protect myself from the scenario that we're experiencing right now in gold. As I only had a few more, you know, I didn't really have that many gold positions left after the big drop last Friday. But I did, to protect what I have left, I'm doing something. And if you want to find out about that, you should consider becoming a member. Okay, and to do that, you just come back to the page here, click on this link or the join button. If you click on the join button, this pops up, become a Blue Cloud supporter, Blue Cloud trader, or Blue Cloud Legend level member. If you want daily trade updates, you become a Blue Cloud Legend level member. If you want them just once a week, become a Blue Cloud trader. Under Blue Cloud supporter, you're supporting the channel. You can request a stock or ETF be analyzed on an upcoming show. All right, let's get back. So, okay, so we covered all those stocks. We covered 17. Let's look at Apple next. Here's Apple. All right, up 0.20%. It does have a blue flag. Here's the weekly chart. And it looks like it also, let's see here. Well, we won't know for sure. Here's the high, 260.10. We just, wait, I probably already have that on there, don't I? Let me see. Yeah, I did. I opened up a new, see this over here? There's a little section called boards. You can like create different boards so that you can, if you want to get rid of all your lines quickly, you can do that. See that? Let me get rid of that too. Okay. But so there's the high from that candle. Okay, that's the 260.10 level. All right, now that's a weekly level. We won't know exactly where this candle is until Friday. So this, even though it looks bullish right now, it could certainly pull right back under if things get sour by the end of the week. So then we'd be creating ourselves a double top potentially on the weekly chart, and that would not be good. Right now, it does look pretty good though. But this slight move up, 0.20%, nothing to get excited about. It is at least holding up above. You know, yesterday we broke through it, that resistance level on a Monday there, and then here we are on Tuesday. That's a reversal candle. They call that a gravestone candle. So it's not an ultra bullish candle. Okay, Tesla. Tenkan-sen is still holding under the Kijun-sen, so I stripped the blue flag away from it. It also dropped 1.08%. And like I said before, we're still under the prior high. In fact, we're still under this high too. And we've got a lower high here from the highs back there, 488.54. So Tesla's not something, and you know, the fact that we have a negative crossover, that's a little concerning. And then if you look at the weekly chart, yeah, we've just been stalling in this little region, this little box theory. Nicholas Darvis, check that guy out. Interesting trader from the 50s. Here's Meta Platforms on the weekly chart, under the Tenkan-sen, on the daily chart, under the cloud, no. And we got ourselves a spinning top too, okay? So it's stalling right at the bottom of the cloud, right under the Kijun-sen. Stay out of that one for now, at least. That's my take. Here are the sectors. I've highlighted the strongest ones. Out of 20 sector and ETFs, different types of sectors and ETFs that we've got listed here, it's just going to be 5. That's not a good sign for the markets. By the way, if we also take a look at let's go back to FinViz for a moment. I want to show you guys something that's happening right now as we speak. All right. New lows. Okay. I think that, you know, what's happening right now is there's, you know, we had 79 new lows, 41.4% are experiencing new lows, 58.6% are experiencing new highs. This is like there's no clear winner here. There was about 47% advancing, 49% declining today. On the SMA 50, the 50-day moving average, you can see there's about 48% of stocks are above and 51.5% below the 50-day moving average. That's not good. And then if we look at the 200-day, it's starting to probably, that's also starting to like get a little bit worse. There's about 44% below the 200-day moving average and just 55% above it. So, yeah, just wanted to let you guys know about that. Okay, so let's look at the strongest ones here. XBI, biotech, strong uptrend still, even though it was down 0.55%. That's the daily chart. Here's the weekly. We've got all the elements of Ichimoku telling us that this is still going. Problem is, on the weekly chart, it is starting to look a little bit, a little bit overbought. When price gets that far away from the moving averages, the equilibrium levels here, expect it to pull back. These are like magnets where price will come back. They always do. So they don't go up forever. And so I think it's had its run here. I'd be really cautious at this point. Here's the daily chart. Seems to be stalling a little bit right there in that little, in this little segment right here. Okay. Industrials up these last few days, up 0.89%. I like what I'm seeing here on the daily chart with the industrials, XLI, ETF. We get the cloud is still bullish. It looks like it's stalling around that high right there of 155.94. So we got to get above that. XLK, this too, it broke through that little triangle there, but it hasn't really been taking off, right? ADX is still dropping. This is not volumes dropping. No interest here. Healthcare, on the other hand, seems to be a little bit better. Look at the volume bars here. These are, even though they're moving up, they're just moving up slightly, but they are moving up. So that's a good sign. So I do like XLV a little more. It's a defensive sector as well. So it should do okay in most most worst case scenarios. Healthcare is something that people will need no matter what. Here's a weekly chart. It looks like the cloud still needs to break, it has to become positive here. But overall, this week, it's breaking above the Ichimoku cloud. And on the daily chart, it's looking pretty good. I think we need to get above the high here of 146.13. And then to retest some of these prior highs here. Let me get rid of that one. That's an old line. Okay. But overall, I like XLV. SMH I like too, even though it's down 0.55%. It's kind of stalling right now at these highs, right? But maybe it will turn into something. Maybe a little ascending triangle pop up. We shall see. But right now the ADX is dropping. I wouldn't get too excited here either. The rest of these, there's something wrong technically, like the Junior Gold Miners ETF, right? Under the Kijinsen. Oil K, which is the crude oil strategy ETF, the K1 free. You don't have to report a K1 at the end of the year. This is also dropping, up 0.4% today though. Copper, down. COPX is the Copper Miners ETF. That one's, let's see, did it close under Kijinsen? 59.30. No, just barely above it by 3 pennies. So it's holding up. But it's not a good sign when the negative DI is moving up, positive DI is moving down. So that's, that's not a good sign on higher volume. All right. Let's see, XLC. Communication services, it was up 0.35%, but we have that negative crossover there. Bitcoin is under the cloud, but up 0.89%. So that's good for Bitcoin. But notice what happened when it came to that Tenkan and the cloud. There's the wick. You can see the wick of the candle. Came right there and then dropped right back under that 63.70 level where it feels comfortable in here for whatever reason. Gold dropping in between the two moving averages. Guys, when was the last time that we saw GLD under the Tenkan? Think about that for a moment. Last time that was the case was back on August 21st. Right over here. When it got above the cloud and everything right there on August 22nd, it moved up quite a bit. It moved up approximately 29% in 1.9 months. it dropped 6.4% just today. So again, be careful with gold right now. Real estate. We got a reversal candle. It's more than likely going to pull back here. Okay, that's also a bearish engulfing pattern. I'm sorry, bearish harami. Sorry, bearish harami. So the body, a small body is within, follows a larger bullish candle, like right there, like what you see there. SLV, silver, also dropped into the Tenkan-sen. Last time it was under was back here on September 18th. It was short-lived, but this one is a little bit more extensive. It dropped all the way down to the Kijun-sen and touched it, as you can see there. So I don't know what's going to happen tomorrow. If it gets under the Kijun-sen as well, expect it to pull back to the next level, potentially all the way down to the cloud. That could be another 16.3% to the next support level. That's where the cloud is. 16 or so, 16% away. GLD is about, if it gets under the Kijun-sen, the Kijun-sen, the 26 period is 2% away, but if it gets under that as well, we're talking about 14% drop, potentially. So we talked about real estate. Silver, yeah, we talked about that. Consumer discretionary, it's not looking good here because Tenkan-sen is under Kijun-sen, but actually it does look good. It looks better. It looks healthier today, up 1.22%. The fact that consumer discretionary is moving up is kind of interesting to me. Like, you know, it doesn't make sense. Here's the weekly chart. It's still stalling at these levels. And here's the daily chart. So yeah. And then utilities dropping 1.02%. That looks a lot weaker now because it also took out the lows of these candles. That's not good. Consumer staples has been in a decline for a while, down 0.46% under the 200-day, under the cloud. No. Financials is inside the cloud. No on that one. Energy is also under the cloud. No. Home builders is inside the cloud, but not a time to be adding. Chico Span is under price. Tenkan-sen is under Kijun-sen. It's not looking ready yet. And then look at this, the basic XLB, right? Basic materials ETF. XLB is under the cloud. Not good. Okay, let's look at Uber next. This is some of our members' requests, and we got Uber down 0.72%. It's actually entered the cloud. Tenkan-sen is under Kijun-sen. Chico Span is under price. The cloud is still barely bullish here, and it's finding some support at these levels. But if it gets under the lows here of the cloud, I think that you could see it pull back further. Here's a weekly chart. It still has support at the Kijun-sen as well. It's about 3.5% away. You know, you have to consider whether you want to be holding into a potential pullback, because it could happen. Lyft looks a little stronger. Here it is on the weekly chart. You can see that it found support on the weekly chart on the Tenkan-sen. It was up 2.13%, unlike Uber, which was down 0.72. Everything looks pretty good, okay, I guess, with the directional movement index. And then on the daily chart, you can see that we are slowly starting to move up. The only thing is we get that little upward channel there, but Tenkan-sen is still under Kijun-sen. Okay. BBWI is under the cloud. Here's an interesting one, because on the weekly chart, if you look at this, you know, it's been finding this 24.94 level has been getting hit over and over and over again. If you look at it on the daily chart, all the way back, look at this. See, that is a support level right there. It didn't quite reach it here on these lows, but recently, since April, this is what's been happening. Check it out. Price has come down, found support at that level, and bounced. Came down to the exact same level and bounced. Came down to the same level, bounced. Same thing again and again. It's a total of 5 times this year where it keeps hitting that 24.95, or what is that, 24.94 level, okay? Right now, what's going on with it? It's just moving sideways. So if you have a position in this, I mean, I would just maybe consider even holding even. I mean, if you're already in it, it's not like it's breaking down at this point. It's just moving sideways. But if it gets under 24.94, you're in trouble, most likely, if it closes under it. So watch that level like a hawk. That's my recommendation. And on the weekly chart, you can see it all right there too, right? So this is certainly not something I'd be adding a new position in because it's under the cloud. Generally, I'm only looking for stocks that are, or ETFs that are above the cloud, unless I'm doing a hedge, and that's another story. If I'm hedging my entire portfolio or specific stocks or something like that. Okay, GFS, Global Foundries Inc., technology sector, semiconductors. This one on the weekly chart has been under the cloud for a while now. You can see since this point back in June, was that August 18th of 2023? Wow, it's a long time. And it's dropped about 37.9%. Now, in recent times, this year, it does seem to have bottomed out possibly. You can see that level, this level here, right? In fact, there is something positive, and that's the fact that we do have a higher low that's kind of developing there. You can see that, right? And so it's almost like a symmetrical triangle pattern is what I would call it. And so I'd be just watching to see what happens. It's probably going to keep on getting squeezed in here for a little bit. But if it starts to break above, if it starts breaking above the trend line that you just saw there, or inside the cloud, it could potentially move back up. All right, but this is a stock that wouldn't be recommending because the profit margins they're negative 1.68%. But yeah, if you're holding it, it's really also about how long you want to hold a stock that has been declining for this long. But right now it is kind of stalling. Okay, that's the weekly chart. Let me look at the daily. Yeah, you can see it a little more clearly here on the daily, how it's starting to show a little strength, right? So there's the higher low. Okay, we took out this prior high here with that candle. So that's good. And so all we need to do now is just wait and see what happens if it can get through that symmetrical triangle. And that's going to do it for this video, folks. If you liked what you saw, don't forget, I am trying to reach my ultimate goal here. I don't think it's going to happen this month. I think we'll reach 24,000. I do think that we're going to reach 24,000 subscribers. We're almost there. We gained a lot yesterday. But yeah, ultimately I'm really looking forward to hitting that 25,000 subscriber level. So help me do that. A lot of you are watching. It takes 5 seconds out of your day, hit that subscribe button. Why is it beneficial to you though? Because then it'll be harder for you to miss an upcoming video. You can find them easier here in the subscription section. Okay. And you can even put a notification bell so you'll be notified when a new video pops up. Stock market is time sensitive. You want to know as soon as the videos come out. At least I would. If it was a channel that I liked, I certainly do it. Anyway, that's going to do it for this video. So thanks for watching. Thanks for supporting the channel. I appreciate all of you guys. Hope you have a great rest of the day. I will talk to you later.